Aquamarine Capital Management's chief executive, says that pullback was inevitable. Guy Spier is with us now. So welcome to the programme, Guy. And I wanted to get your view on the euro because one crisis of confidence after another we're seeing. Will the eurozone pull through?
Caroline, good morning. If you would have had me a year ago, I would have said there was a breakup of the euro at stake. I actually believe very strongly now that the policymakers will do whatever it takes to keep the euro together. And they're caught between a rock and a hard place. You've got the markets on the one side dictating to them, the credit rating agencies dictating to them what they need. And on the other side, you have some electorates who are showing their muscle. You can see that in France, you can see that in the Netherlands, and of course you've already seen that in Greece. But I believe that the commitment to see Europe through this crisis intact is extremely strong.
So you think you're not too worried about the Netherlands, the collapse of a government? Do you think that they will keep hold of their AAA rating?
I believe that the Netherlands will. I think that what caught the markets by surprise yesterday is that we group the Netherlands together with Germany as unquestionably AAA. And then suddenly we have the collapse of a government. It's got some of us going, let's just go and take a closer look here. Their debt to GDP ratio is not that great. It's other sectors of the Dutch economy that are highly indebted. And it's got a whole bunch of us doing a double take. And I think what you're seeing this morning is as the people who are fast off the block are realizing that it's actually not that critical.
So, Guy, in all this uncertainty, even though you think the eurozone will pull through, keep the euro together, where should we be putting our money? Because interestingly, you're taking a leaf out of Warren Buffett's book and looking at the US residential housing industry. Yeah. Are you avoiding Europe entirely? Are you looking elsewhere across the Atlantic?
Yeah, that's a classic case, Caroline, of don't do what I say, do what I do. And the truth is, even though I'm living here in Europe, we're global investors and can look anywhere in the planet, and it's hard to tell clearly how Europe will develop. And I believe that the picture is much clearer both in the United States and in Japan. Just starting with the United States, I think that we are very close to a turn in the US housing market. And with that and the political cycle of an election that's going to be done within a year, I think that we're going to feel a very different tone in the United States going forwards. I think that the recovery is going to accelerate. So I think that's an easy thing to see, whereas in Europe it's much harder to see.
So how do you gain exposure to the US residential housing?
Yes, so there are a whole slew of it's a very, very important part of the US of any economy. So you could go to building supply companies like Lowe's, or you could go to housing builders. I've chosen to do it in a much more generalized sense, which is the US money center banks, which is an easy and straightforward and diversified way to play that, because they will benefit massively from any recovery in the US economy, from any recovery in the housing sector.
And money center banks being the likes of Wells Fargo, the likes of JP Morgan Chase?
Yes, and those banks are in an unusually good situation in that they have unquestionable, easy funding in all environments. And they see they're in the best position to put money to work in the lowest risk opportunities on the lending side as the recovery happens. And the minute you go to smaller banks, you're looking at more regional and more company-specific risks, which probably don't exist with the bigger banks.
And very quickly, Guy, you also like Japanese firms, but focusing on the smaller sized firms in Japan.
I think that this is the most incredible opportunity that we've seen in the last decade, if not more. The concept of a net or a negative enterprise value, where a company is trading for less than the cash that's on its balance sheet, is truly remarkable. And one would imagine in efficient markets that wouldn't exist today. And it does exist in Japan right now. How hard is it to do the analysis on a company which has got positive earnings and has cash which is greater than the market cap? It's sort of what you would say a no-brainer, or what Warren Buffett would say is shooting all the fish in the barrel after the water's run out of the barrel.
So a most incredible opportunity for Japanese smaller firms. Guy Spier, Aquamarine Capital Management's chief executive. Thank you for shedding all your light on where you should be putting your money right now. It seems US residential and smaller Japanese firms are your pick.